Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Tuesday, April 16th, 2024. Let's take a look at the charts. I'll start with this one, a weekly chart, weekly bar chart going back several years, but it really is this 9-month channel structure that I'm underscoring here that we tested the top of that channel. I'm going to go to this chart actually, 237.48 now, was in the low 260s when we tested it, excuse me, in late December. At that time of testing it, we'd mentioned how you should allow for bearish rotation to channel support within 2 to 3 to 5 months or so. It took 2 months. We've been plodding along this channel support now for the last 3 months. We even closed below it about a month and a half ago by the required 1% margin, only to gap right back above it the following Monday, and it's been holding well ever since, as it did initially about 3 months ago. 158.42 is the weekly chart support. You can find the same structure on the daily chart at 159.61. This is your zone to buy in anticipation of the mid to upper, the mid 180s. Over the next 2 to 3 weeks or so. There's probably a better image of it on the daily chart. You can see it here, yes. Holding above 159.61 will keep 188.09 in reach over the next 2 to 3 weeks. It is a bit stair-step, but it is... It has become 2 to 3 weeks from 3 to 5 before. We do have today 168.51. We violated this level early on Monday. It can contain intraday buying pressures, possibly for the day, and below which 159.61 is expected, which isn't saying much because we're just about there right now anyway. If we push or open above 168.51, 172.41 is likely. That is a 5/8 upside Fibonacci over the last 5 days. We could top out there for the day. If we close today above 172.41, expect within 3 to 5 days this 184.25 to 188.09 still targeted midterm resistance area where we could top out into May, fall away again back into the upper 150s. As I've been saying, we could trade inside of the upper 150s to mid to upper 180s over the next couple of months. A 2 to 3 week rally into the mid 180s, a 2 to 3 week sell-off back into the upper 150s, so forth and so on, before one of them presumably gives way. Despite the fact that we are very close to long-term support in the upper 150s, I still say the likelier outcome is that 188.09 will give way in the next several weeks to buying pressures, and under that scenario, I would expect then 237.48 within 2 to 3 months. I have been saying all along that as we're testing this long-term support in the upper 150s, you can anticipate the possibility of 237.48 within 3 to 5 months. Possibility as far as you could actually prepare for it. You know, you could reach for 235 or 240 strike out of the money calls that don't expire. I would probably at least 6 months, if not a year out. But in terms of heightening the likelihood for reaching 237.48, it would be a buy signal on strength above 186.05. And if you've done nothing yet, that would be your opportunity to reach for those 235 strike out of the money calls. By that point in time, that don't expire for at least, I would go 6 months out, still a 2 to 3 month rally. But really, what we're seeing here is what we have been seeing now for the last month or so, and that is to say meaningful support in the upper 150s, resistance in the mid 180s. It's about as simple as that. And if we close today above 172.41, we should see 184.25 to 188.09 within about 3 to 5 days, where once again we could top out into May activity, fall away again into the upper 150s. So that covers the upside. What about the downside? Well, if we happen, to gap below, for instance, our 158.42 support, which you can actually find once again on the weekly chart here, if we gap below 158.42, doesn't look pretty, obviously. I do think within the day we could actually fall to 148.70. Nothing more than a simple trend line off the February and March lows. Well suited to contain daily selling pressures, but yes, from 148.70 we could rebound Wednesday, Thursday back into the upper 150s. I will say, though, that if you're long the market and anticipating the upper 180s, and we close today below 158.42, which is the same formation on the weekly chart, you may consider liquidating your long positions. Because I do think this thing could just continue south. 148.70 may contain the remnant selling pressures for the rest of the week, and insofar as bottoming out here on a daily basis and then rebounding back within a day or two into the upper 150s. But of course, if we close the week Friday below 158.42, it doesn't even have to be by a 1% margin anymore, because I think just closing below the 160.51 double bottom that currently exists at the end of the week does set up for 137.81 over the next 3 to 5 weeks, and 101.81, that January 23 low, over the next 2 to 3 months. So if we close below 148.42 today, I see no good reason to stay long through the rest of the week, despite the fact that we don't have a quote-unquote official sell signal yet that comes on a Friday with the weekly charts. I do think you can act sooner than that, at the very least covering long positions. Play the short side into later week. I don't have a problem with that either. Just know that I would scale into a short position rather than going all in, because of the possibility that by Friday we could close back above 158.42, and it's just sort of stretching the rubber band, so to speak, the analogy I like to use. The rubber band snaps to the downside if we close Friday below 158.42. On an intra-week basis, you could call it sort of just the stretching thereof, with no real official sell signal unless we close Friday below 158.42. Until then, this is bottom picking territory. 159.61 on the daily chart. A holding above that, 188.09, is likely over the next 2 to 3 weeks, and you can make that probably more like 3 to 5 days if we can close today above 172.41. Day traders can sell 168.51, but if we push through it, expect 172.41, where we could top out for the rest of the day. And yet if we close above 172.41, 3 to 5 day swing traders go long into the mid to upper 180s. You could also, 3 to 5 day swing traders, go long in the upper 150s, anticipating 172.41 within several days. 2 to 3 week swing traders can go long in the upper 150s, anticipating the mid 180s within several weeks. But if we close below 158.42 today, I see no good reason to hold a short or a long position, rather, as we move through the rest of the week. We could bottom out here at 148.70 for a day or two, bounce back into the upper 150s. Now, the last thing I'm going to say is if we close below 158.42 today, and then Wednesday we close below 148.70, well, there you have it. That is the last threshold to violate for what I consider to be aggressive bearish continuation. And closing below 148.70, we're just days away then from reaching 137.81. So be careful, respect the sell signal below 158.42. Until then, you can bottom pick that area in anticipation of the mid to upper 180s. That is all I've got. Please click like, share, subscribe. Check out wikistocks.com for our twice weekly stock picks, our daily triple Q and SPY analysis, etc., etc., etc. I'll be back tomorrow for Wednesday's Tesla, and you have a great day.